What's up, guys? Jonathan, Joe, CFATS. It's wild, man. It is. We're gonna talk about it. This is just a crazy show, man. Devin, Eddie, Chris. Yeah, and yeah, I have a lot to cover, man, because a lot has actually changed since the previous video. Following the downside here that I think a lot of people were not expecting, including myself. But that's the market, man. That is the market for you, and we're getting a little taste of that right now. But I'm going to talk about the positives and obviously the negatives of the stock. I mean, and it's gonna make sense based on the cycle what I'm gonna talk about here, because it really does make sense, and I'll explain why. But basically, in just quick terms here of like what AMC is doing in the next few days, and then I'll talk about the option chain as well. So AMC just did the reverse split, and it did that before the conversion back with APE. So tomorrow we're going to get the conversion. I don't know why they're doing it like that, but that is what they're doing. That is what is on the term sheet. So tomorrow we're going to get the merge back, which is good. We already talked about that we want to have just AMC trade and be in one rather than have two stocks trading, right? That's just not what we want. So I think it's going to be a lot better to have them both merged. The reverse split took place. AMC is trading right now at $13, still coming down from that. And I'm going to talk about what the hell and what just happened here, right? All right. So the charts are still going to be a little wonky. They're not going to be the same. Like if you go on Webull or TD Ameritrade, they're going to have different charts because the adjustment is still kind of in the air right now. It hasn't fully been and fully gone through. Like on Webull's chart, you actually see the price go up to like 270 here. And then back here, it's like it wasn't even adjusted. It's at 77. So it's a little weird. Some of the charts are, again, a little wonky. But I do like TradingView's chart. I think right now that's the best one. So that's what we're going to talk about and use here. And I want to talk about the cycle real quick, because now it's starting to make sense. And I'm going to pull up two indicators to show you guys what is going on here, what we're doing here. So here's the cycle. All right. With the adjusted chart, it's so much smaller. It actually looks a little better. So this is what's happening, guys. This right here, this 10-minute 100% move on AMC, if you think about it in terms of the cycle, this was an error. This was not supposed to happen. So that means that going back to the other placements here of like where we see these spikes, these error spikes happen outside of the 13-day window. But it's like we can clearly see now that this was an inverse POI again, meaning that the price it was inverse to the cycle because it happened on that 13-day window. So that still holds. The cycle is still tracking now. But this was the first time, so now we have a 6 for 5. Technically, this is going to be our sixth one because, and I'm going to pull up the indicator now. It's going to make sense here. But a lot of people don't realize that this right here, this move, is basically an inverse squeeze. All right? So the price, if you come back here to June, right, from the bottom, it goes up about 700%, right? But it's easier to look at this and then look at this, like, ratio-wise. to the downside, right? It's only going to show negative 81%, and this is from $8, guys. So we're not taking it from 6. We're taking it from the top here. It's about negative 84% to the downside, but that equates to about a almost 500% move if you were flipping the cards. 530% to the upside. So if you got to compare the two, because it's the same thing. If somebody's shorting the stock, they're going to gross in 530%, not 83%. So it's the same thing. It's just backwards. It's inverse. So what happens when the stock goes up that much? Well, it has to come down, right? And it has to come down for a while. That's what it did. And, so a few things with AMC. I don't think this is going to happen in days, right? But I do think that we're learning a lot here on what these guys are trying to do and what AMC is trying to do, right? Because a lot of things changed. A lot of things happened here recently, and this is not fun. I mean, the price goes down from $80 to $13 in a month, dude. In a month. And yeah, that's hard. That is hard, dude. 30, 33, 32 days, the price goes up, and then it just dumps all the way back down. And that's not even including APE in the equation. So it is hard to look at, man. It really is. But like here, it's about being like real, talk about the downside possibilities and what we can expect after that, just looking at technicals and the cycle. That's what we're doing. And right now, it looks like AMC. I'm going to pull up this very important indicator here. But at what value is AMC going to or wants to bounce back when the conversion goes through? Because right now, the option chain is also messed up. I posted about this 2 days ago on Twitter, on X, that they are again going to wipe the option chain. And basically, that is kind of happening right now. Like Robinhood doesn't have an option chain. And then also, if you go on Webull or TD Ameritrade, they have the adjusted non-standard contracts for the current contracts, which means they hold very little value if they're outside of the money. And then once the new standard contracts come in, no one wants to buy the old ones. So that it's a bit of a scam, in my opinion. I just seems like a scam to me that they can do this, and that's legal with the option chain. It's what they did back here in August of 2022. All right, so that's one, right? The option chain. But look, just coming back to look at these technicals, guys, look at where AMC is currently at right now. And this is where you do have to look at the macro chart and see, like, is this stock going to go 2 pennies or is it going to bounce back and go, right? Well, you got to ask yourself a few things. There are stocks out there, and I can name multiple stocks. Like, there is BBIG, there's Bed Bath & Beyond, there's Xella. These guys, they had reverse splits multiple times. They went up and down multiple times. But in AMC's chart, we've only had a reverse split once, right here. And the stock itself, if you look at the macro stock, it's doing what a lot of stocks did back in 2020, which is pump, dump all the way back down, and then eventually make its way back up. And I can pull up many stocks that have done this before, but you got to look at these other stocks and their fundamentals to sort of check things off there, because this doesn't look good right now. It doesn't. But does that mean that AMC is going to ride back down into the penny range? It can, but that's not something that is guaranteed. So you got to look at both sides here. We're going to take a look at Carvana. And then we're going to talk about what this means, right? Because Carvana the chart looks different. But it basically did the same thing over a similar period in time, in that the stock goes to $400. Now that we have the adjusted chart, you can kind of see the similarities between the two. And this is going to change tomorrow a little bit when APE comes back into the equation, but it should remain at the highs of 400, which is important. And here you can see it goes from 400 all the way down to what? $3. And then from $3, it takes a little bit of time, but then it goes all the way back to 60, and now it's kind of making a comeback, making its way back up. This is what I'm talking about. So did BBIG do this? Did Bed Bath & Beyond do this? Did Zella do this? No, none of them did that, because those stocks did not hold the same fundamental value. At the end of the day, you do have to look at fundamentals for certain things. I don't think you have to look at fundamentals for short-term price action, but maybe for long-term price action, it does matter where the stock is going to go in the end. If it's a really shitty stock, you're not going to see that return happen in a short period of time. I think it's going to take some time, because these guys know what they're doing when they release the catalyst. If it's earnings, if it's something to do with these stocks, they're going to manipulate it in some way that doesn't reflect the actual catalyst that's coming out. So that's what I'm saying, dude. And I think that's where we're headed, at least. I think going into the next couple of months here, I think there's gonna be an opportunity regardless, because we are trading at these extremely oversold levels. Again, the changes indicator shows us that it's like a hidden RSI showing us all these historical levels, and you can see AMC is currently sitting at that negative 70%, 69 right here level. And just look at the past, bro. Like, this is March of 2020, COVID. Right here, October of 2020, and then January of 2021. Now, if we cut it down to the 13-day window of the cycle, you go back to February of 2021, which is when AMC pumped to 25 and then fell all the way down to those low levels prior to the mini squeeze we had here in January. So very similar levels, guys. We haven't seen this in a while, but again, this is an inverse squeeze is what it is. It's up. If you were a short, it's up like 500% right now. So if you were a short back here, retail, you're up about 700%. Same thing right here. If you're short, it's about 500 and something percent, meaning that the price can technically still trade in this range for a little while until it starts to reverse back up. And this is where we're going to look at the cycle again to kind of crack down and see when this could potentially happen, if it does happen, right? Because right now, being that the price is inverse, we're clearly seeing that, a bounce back here would mean that we're close, because we're at the peak here. So just like we were at the peak everywhere else in the cycle, peak, 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 this is inverse peak. And then essentially what we want to see is a reversal back up and a continuation. So what, like, some of the things that confirm or can't confirm this for me is also looking at technicals to kind of see like what could happen based on that, and a few things. So we have a parallel channel right now, right here. And we are on that third bounce. So every single time we bounce on this parallel channel, it takes a little bit of time. It takes about a month. That's about mid-September time for it to start bouncing back up right here. And then from there, we have what we would consider the next point of interest tracking on this current cycle with what just happened. the possibility of coming back up around October time. October time, if we do something like that, this is going to happen very quickly. The current shareholders did get diluted, but the stock did not. So you have to look at those two things, right? The current shareholders are diluted, but the stock is not diluted because your reverse split is the opposite of you're putting less shares available to short in the market. The stock goes up, the outstanding shares decrease, they go down, and then now you have a lower float in the market. So it doesn't mean that the stock can't come back up. I mean, it's just right now it's being dumped like crazy, but in no way does that mean the stock can't bounce back up. Again, we saw it with Carvana, we saw it with AI, we're seeing it with Upstart. All these stocks that got beat down from 400 to the dollar range in a matter of a year, they're all bound making a comeback back up. It is. Look, this is a very sucky thing for people that have been on this play for a while. It's a very sucky thing because it's just unfortunate. A lot of things happened in the recent months that really shouldn't be happening in the market. And we look at the data. We look at mainly the data, actually, or the short data and all that stuff. And I talk about this all the time, but a lot of that is used to, just like they use bringing out catalysts and stuff to manipulate and basically make people make the wrong decision, the wrong choice. I do believe that the markets have that scammy nature in them. And that's one of the things I talk about. I don't like the data that comes out on AMC because a lot of the times it's just a scam, man. I don't know, FTDs, all that, dude. But with that, it's not that it won't reflect in the future, but this is why I say fundamentals matter in the long term, but not in the short term. Some of that data might reflect the price action in a few months because you gotta show retail, right? You gotta show retail that, hey, I told you so. That's basically what happens is they'll bring the price down and then they'll be like, yo, short interest was up for 3-4 months and now the price is at $100 or something. That's basically how they do it. And they just kind of crack at it and BS the stock for 3-4 months before that actually happens. So it's never going to be on your terms. I don't see it like that. We've seen this happen multiple times, but it's really never going to be on retail's terms. It's always going to be on their terms, and that's why you got to play their game. Look at both sides. But yeah, man, I personally did not think this was going to happen. I did not think the stock was going to go from $80 to $10. I think that's very steep considering that we've been doing this for almost 3 years now. June. Not 3 years, 2 years. It's steep, man. It's hard. But the lower this goes, the higher the risk, but there's also there's a higher risk, higher reward the lower the stock goes. That just is how it works. A lot of stocks, again, have done this already where they come to these low levels and they bounce back up very quickly. And this right here, my guy, this is what I'm looking at. This is my favorite thing to look at right now is this indicator right here. If you want to look at a similar indicator, it's called ROC. This one works slightly different. It's got slightly different calculations on it, but you're going to get something very similar. And it's just telling us that the price is very, very oversold. Looking back to February of 2021 and March of 2020, So, I mean, how much lower can this go, dude? Because this is low, dude. I mean, we're talking about like 1% away from like having an all-time low. Uh, it's and we're not even at those levels yet. We're getting close, but we're not even at those levels yet. The way the this thing is dumping so fast that I think we probably are going to cross this and then bounce very quickly. But right now it's at negative 69.4, and the all-time low is 70. It's close, dude. But that's how I treat the market, man. Like when you get to these levels, you do have to look at, like you don't buy when the stock is pumping. You like people buy when the stock's going down, because it's likely going to reverse back up. Every single time we have hit these levels on average, it takes about, so here it took about a week or two to bounce back up. All these other times, it's pretty similar. Because this is such a drastic drop too, you have to consider like the entire chart here. But like when you see these pumps, guys, they come back down very quickly. So whenever this bounces, it should be a quick bounce and then, steady on the way up. So it'll bounce up maybe like at these lower, say that it goes down to 10 or something. If it comes down to 10, it probably will bounce up to like 30 or something in the short term. And that's like a, 200% move right there. And then it'll trade sideways until potentially the next point of interest in October. If things are bullish then and, finally they crack down on everything else that we've talked about, then there is a potential for AMC to come back up. But right now, it's really letting it ride. It's really, really risky for playing around at these levels, because one of the things I talked about with like penny stocks in general, this is not a penny stock right now because of the reverse split, but with a lot of penny stocks, when they go into that dollar range, you're in extreme risk territory, because then if they are able to bring it down to extremely low levels, then you're kind of fried there, man. Bed Bath & Beyond went from $7 to like 6 cents in a matter of like 2 months. That's ridiculous. That's crazy. So that's something that I never wish upon AMC. I don't think AMC is going to do that. But you have to always consider the worst case scenario. Fundamentals wise, you can't compare the two. I think it's silly to compare the two. I think that's why Bed Bath & Beyond did what it did, regardless of the backing it had from a lot of people. But it did do that. I mean, so you always have to keep that in case that things just don't go your way. I mean, that's the market, dude. Okay, so a few questions about the option chain. Again, I went over this on Twitter. The option chain right now is currently being adjusted and will not be fully adjusted until both the reverse split, which just took place, and the conversion, the merge back with APE, have both happened. So it's not. I don't think we're going to see an option chain till Monday. That is what's probably going to happen. I think even Robinhood right now has removed their option chain, and Webull is showing something else. TD Ameritrade is showing showing something else. That's what the OCC had brought up and talked about for a little while. We did not have the second version of what they were going to do with the option chain. So the first one said that there wasn't going to be any like shift in the ticker name for the option chain. So at first I was like, okay, so they're not going to do a shift. That's good for options. And then like soon after that, 2 days later, the second one came out saying that they were going to change it, and the current contracts are now non-standard. So you guys know how this works. Back in August, they did the same thing, and these became non-standard. They became illiquid, and that means that nobody likes buying them. Like, nobody wants to buy a ratio version of the price when they could just buy the actual contract without having to convert something, because that's a hassle, right? But I always say this, and I do think that this is one of the loopholes these guys use. I think it should be illegal. I think that's just really messed up, and they've done this already twice. So this is how you know why are they doing this? Like, how can they do that with so much liquidity in the market that so many people hold to and don't know will affect the contract of their price? You can exercise your shares for these non-standard contracts if they're in the money, but there's no reason to exercise if they're out of the money. You're losing money at that point. And even if they're in the money, that's a very small portion of the liquidity in options. Most of it is outside of the money, especially for calls. So that's my problem, dude, is that nobody talks about that shit, but it's especially them, the freaking people doing it. They're not going to tell you, hey, your contracts, they're going to lose value, by the way. And we're going to release new contracts. And yeah, you're going to wait a little bit till that happens. So we're going to dump the price a little bit more. Like, that's literally what's happening right now, dude. Craziest shit, man. It's how the hell is this not illegal? How? I don't, man. I said this before, but no, I don't hold options for AMC because I was very clear about this. This that happens right here is the most messed up thing. I'll tell you guys the first times I experienced this, because this right here, it's been around for a while, but the market squeezing and doing what they did had really never happened in the past. Like, you can go back to 2008, sure, and there was some stocks that had been doing similar things, for liquidity, similar things, but because we're in a different age, different generations, different markets, everything changes and new rules come in play. So one of the first times I experienced that kind of harsh in the way that I did research before as well, but we didn't have the same technology, so it was a little bit hard for me to differentiate what was actually going to happen. But I learned the hard way with I think it was Meta Materials. I had some contracts prior to the split, the reverse split, and they were basically worthless after the split because they adjusted the contracts and they lost a lot of value because nobody wanted to buy them. And they were slightly outside of the money. So you could tell the bid and the ask could take a pretty big hit between the two. So that's my only issue, man. That is my only issue is nobody they don't push that out. They don't talk about it. It's like, and it's a lot of people like that, playing there's just the stock, right? Buying the stock, you can many different ways to purchase stock, but some people like the leverage part of it, and I think options do that well. I think they're very risky, not for everyone, but the one thing that I wish they did touch on, that I wish the administration would at least talk about, is what happens with options after that, because they don't. Man, they don't. It's yeah, and the worst part, man, is that they did this exactly 1 year ago as well, and like they did this 1 year ago on August 22nd. The option changes changed. They got new contracts in. You know that those contracts right now are the ones that are being converted again. They're to non-standard. So think of like, like when margin calls happen is because of these contracts that start to go in the money. So the ripple effect that takes place with options, and man, this is just crazy. Like now that I'm looking back, because the price, like they're basically able to exit these contracts yesterday. Right now, it's you have a new chain. Even though it's not out yet, because there's no adjustment made with APE yet until tomorrow. So likely gonna have something maybe out tomorrow, maybe on Monday. We'll see. But for this period in time, everything outside of the money, all the contracts that are out here, these guys are trying extremely hard to keep the price below levels to where you would experience that ripple effect, that gamma squeeze. And then the worst part is, so because you have a new option chain right here, everybody starts buying those contracts, right? You have millions and millions of contracts being bought outside of the money. They're not in the money. So when this takes place and everybody has contracts outside here, there's a new option chain now. So it starts from scratch, from zero. And zero open interest. There's no open interest, meaning that nobody holds contracts yet until they become available. And then up here, all the ones that are converted right now, so the split non-standard contracts, nobody wants to buy them. So it makes it extremely hard for even if it goes in the money at some point, these become illiquid very quickly. So people they're not able to sell them. So then you got to ask yourself, like, how does this affect the gamma ramp? It's different at that point because the chart has not only gone down to new levels, so now it makes it harder to come back to the original average of where the option, so what we would call the max pain of certain option expiration dates, that falls down now. It's below. It's lower. So the gamma ramp becomes harder to actually happen at those levels. Doesn't mean that we can't squeeze and go up higher than some of the levels. It just becomes harder because, the option chain is a leverage tool that these guys use to bring the price down. That's my issue with this, is you're basically wiping it clean in this. Like, they're like sugarcoating it almost, and because they don't talk about it. So it's just very like sugar-coated, and there's not enough attention on it. So it's upsetting. It really is. But that's just one thing, man. That's just one thing in this big deal here. I mean, yeah, let's look at APE now. Let's look at APE. Because APE is also down. And when the conversion goes through, we're going to get another chart. That's what, if anything, man, I'm I'm excited about that. I don't want to see this freaking past year has just been absolutely terrible. Looking at two different tickers, this is the best part about everything here. Is like we're getting one ticker now, man. We'll deal with just AMC, no BS, just AMC. All right, and we're gonna look at the stock, man, from here on that. So now that we have that out of the way, I want to talk about the chart. Besides the split and everything that's taking place, there are a few different patterns that I am currently tracking on AMC, and I'll talk about each one. We're going to start with Lucid, because Lucid, I'm going to talk about its all-time, not its all-time low, but I'm going to talk about this spring setup it had back here. It's very similar in terms of time. So from July 26th to August 26th, that's a month right there, right? We're going to look at the same thing here. And I already have it overlaid on the chart, so it might look a little different because of, yep, it does, because of the conversion. So we have to stretch it back, or the split, we have to stretch it back up like that. And one thing I want to talk about with this setup here is what the chart is showing us. A couple of things. This is very quick. It happens very quickly, but it does line up with the October point of interest. We've already talked about the fact that this right here is inverse, so it's mimicking an inverse squeeze inside the 13-day window. So it is valid. It makes sense that it's happening right here. But to the upside, we don't really have anything else happening until October. So this thing could trade sideways. It can go up a little bit and then make its way back up, kind of like we saw with Lucid down here. 31 days, if you do the math, the same thing, 31 days is where it's currently at. So you can see it goes in a little bit lower before it starts bouncing back up. So actually it's supposed to be like right here, still October time. And then the price starts to gap back up. But you can see that the setup is similar. It pumps first, and then it dumps before making its way back up. And then also, it reaches low levels, like pretty low levels from this chart. So it's a lot. This happens a lot quicker on Lucid's chart because it pumps and then it dumps quickly. This is the first one I'd be tracking. Reason I like this chart is it respects the parallel channel that we are currently tracking right now, this little parallel channel. So it would be bouncing somewhere around the $10 and $8 range when APE comes back in, and then we would see a bounce to the upside. So I think that would be a smaller window of opportunity regardless, because there is, when a stock dumps this quickly, it's likely it will at least have a short-term bounce. At that point, it's just about letting the stock ride and continue here with the technicals, being that it is extremely oversold. But that's scenario one. Scenario two is that it does that, and then it continues to ride to the downside. I would, from there, it's really hard to see where the price is going to go next. The reverse split makes it so that, like looking at it from a psychological perspective, at least AMC is not going to a dollar, right? If this was not doing a reverse split today, AMC would be trading at around $1 something. Yesterday it was trading at $1.90, and today it's down negative 27%. So do the math. $1.90, 50% would be $1. So it would be trading at around $1, like 35 or $1.40. That's not good. That wouldn't be good looking at it from a psychological perspective, but it's not because we have the reverse split. So it sucks again for the shareholder because they are being diluted. but in a way, the stock itself is not. That is the thing. That is the thing with reverse splits, man. All right, let's take a look at some of these other Oh yeah, I was gonna pull up NVAX. NVAX is the one that I was gonna pull up. So as many of you know, NVAX is a massive pump and dump stock. It loves to pump and dump, and this one is the one I pulled up here to talk about because I think this one's gonna make sense. So NVAX, and I have the pattern right here, except it shifted again for some reason. Here we go. All right, so this pattern here, and it's 2019. It's right here. I'm not looking at this part of the chart. I'm just looking at the POI here. But if you come in close, you can tell right here it strays away, it stops tracking. But then you have a similar formation right here on the top. You can see the stock goes up, trades sideways, and then it starts climbing back up. But both stocks do something similar. They pump and dump. This has been doing it for decades now. You go on the weekly chart. This thing from 2001 has just been a massive pump and dump. It's just, and look at how it does it too, man. This thing goes from freaking $10 to like 200, $10, 200, 300, $2. Look at that, $2. From $2, it goes up to like 400. Bro, if NVAX can do it, all right? And NVAX is pumping right now. It's pumping right now. It's been on the timeline here. I think AMC is just is early, man. It's you take a look at all these other stocks that have already done this, and it kind of makes things make a little bit more sense now that the stock is where it's at. This got where it was. You can see, I think, back to 2000. I think it was like the 8-hour chart that you could see like values from like 2000. I think they took them out. I don't know what happened to those. Oh, jeez. All right. Another way we can look at this, guys, is going back to January here, because if we're tracking a inverse cycle here, we can see the price goes up. Then we can track anywhere inside this 13-day window other patterns that have already done that. So everything here in these little 13-day windows that pump and dump like crazy, right? Big ass. Right here and right here. 1, 2, 3, 4, 5. This would be our 6th, okay? This is our 6th one, but because of this, now we do have an error in the cycle. It's 6 out of 5. So the correlation between the points of interest in the cycle are not 100% anymore. 6 out of 5. There's one that did play out outside of the cycle. This one. But this is the first time that we have seen in a matter of a few days. Well, no, we can definitely count some of the other inverse POIs, like the one that happened in November. That one can be in there as well. It did go up about 100%. So that is something we can track. To the upside, though, to the upside, if I'm not including this one, it would be 6. It would be 6 out of 5. 6 out of, no, is it 6? 1, 2, 3, 4. Yeah, 6 out of 5. All of these are inside the 13-day window. This one is not. 6 out of 5 for the upside. For the downside, in a 13-day window, this has been the hardest one. So it's been the one that has fell through the quickest and the hardest. And it's just following a, I'm not talking about a pump and dump, like out, because these dumps that happen here happen outside. You don't see them happening inside the green and the blue portion of the cycle. This one here happened inside the green and the blue portion. So the only time we have seen this, I'll pull it up real quick, but we've seen it about 3 times now. All right, so here's one, and here's the other one. And then this one is also pretty relevant. 285, 183. How much is that? See, but this is what I'm talking about. This is why some of these are not, technically are not considered points of interest. Even though the price is going down that much, this would be equivalent to a 57% increase, which does not suffice for the 70% mark that we track every single time. This one would. This is 70%, and then it goes lower back here, so about 120% from the lows, 120%. So about 2 times, guys, that this has ever happened on AMC. So comparing the two, there's only been 2 points of interest that have played out inverse on AMC above 70%. This one was 120% on the way down to the upside, right? And this one was 530%. Okay, so, and if you take it from, well, if you take it from the lows, it's a little bit lower. It's about 47. It'd be about 200 and something percent. So that's that, man. It's there's one small error in the cycle, but the fact that this happened here, it kind of makes things go back into the algorithm that is currently tracking again, and flow, meaning that the next window time that we have to track here on AMC is right here, from the 4th to about the 27th. Nope. Right there. From the 4th to the 24th. That is the next window that we would expect to see another either pump or dump. Instead, I'm tracking. In the short term, though, because the price is so low, it means that it can still rally and go up quickly, because now we're entering a new territory. I think we're entering a territory where there's going to be a lot of volatility. Volume is increasing. The markets are getting ready to turn over again and pump again. So that there is a slight opportunity here, I think, of just extreme volatility. Man, after everything goes through with APE, it's gonna be a lot better, man. Right now it just sucks, but hopefully we get some clarity on the chart once the APE conversion goes through. Options are clean. A couple of other comparisons that I will be making with the cycle and where I think we are. So I've talked about crypto too. One of the things that I do to make sure I'm in check, just to see where we are in the cycle. So there's an indicator I use. It's called all-in-one, and it mimics basically the same thing that the changes indicator does here. So it gives you the oversold territory and overbought territory for a lot of cryptos and a lot of stocks. The one that why I think that we could be looking at that time frame back here still in November going into January, it's because a lot of the market right now is doing that. We're starting to see a lot of similarities between this time period and this cycle in November. And the events, the catalysts here, that's what's important, guys. I'm going to show you something that actually has it. It's crazy to me. Many of you that have been on the channel have already seen this before, so I'll pull it up now. But mRNA, okay, has been tracking this pattern here for over a year now. You could be on the channel like knowing this too, that I've pulled this pattern up multiple times. I posted this on Twitter that we were in the spring. And this is scary to think about because and one of the things that makes me realize and just confirms that the algorithm likes repeating patterns that have already played out in the past. And then apart from that, you have to ask yourself if the algorithm is repeating a pattern, that these catalysts that are coming out based on what's going to happen in the future. That's scary to think about. But just look at this, guys. Look, the freaking spring here. And if you don't believe me, I purposefully posted a tracker here that we can replay, where you can clearly see here. I've been doing this for a little while now, but we're right here. This is June 26th. You press play, and this entire pattern here tracked to a T. Like, came all the way back up, right? This right here, guys, is actually scary, because if you can track a pattern for this long, and this is why I do this on AMC, because AMC opened this opportunity up. This right here, this pattern that you're looking at, was scanned using a pattern scanner that me and my brother built to scan historical patterns that have already played out. And these algorithms just love copying and doing the freaking the same pattern. It's the craziest thing. This was one of the plays that we recently played on the Discord. It's been the most the craziest one lately. And I think there's still a lot of opportunity. I think actually there were speculations on social media and everything that at some point in September we might have like mask mandates or something. So, the pattern is tracking right now. It's tracking to a T. So we'll see what happens in September. But I'm constantly keeping an eye on this every single day. But this right here is just to show you guys that patterns in the market and these algorithms that are just repeating these patterns, dude, that if they happen at the accuracy at which they are happening, that makes sense. You do have to ask yourself, like, is the market natural? Like, are the things that are happening in the market like natural, or is it just an algorithm that likes to look at other stocks, man, and just like, hey, that one looks good. Let's see what we can release right here or right here to make the flow and structure of this pattern continue, right? It's just, man, that is just crazy. That is just crazy. So that one's been a hell of a ride, man. Moderna has been hell of a ride. I'm gonna make a video at some point, kind of like, man, exposing that, because like that is, AMC is one thing. We've exposed so much on AMC, and I think this is a very small, niche thing for this little community we have here. But it does just raise. You gotta raise those eyebrows, man. Like, What is that? Is that really all just chance? Can I track a pattern for an entire year and a half? Is that really all just chance, or is the price just so natural because on these freaking drops, dude, like on these drops and these springs that happen so accurately, that how is that just normal price discovery? Like it's just nah, dude. Hell no. AMC, man. So and that's the answer really the question that I get asked all the time. Why am I tracking patterns? Why do I look at patterns? That's why. That is why, dude. Because patterns show and have shown to repeat themselves, and they're a really good tool to use as as reference to everything else that you're already doing. So if something is oversold and you see a pattern that matches with the the pattern that you're the time frame that you're looking at, if you're looking at this little window and something matches, the indicator matches, other stocks in the market are doing something similar, similar sectors in the market doing that, that is the type of analysis that goes into this cycle analysis. Is all of this stuff is part of the of what we look at. And sure, just like you would with regular TA, not everything is going to be 100% because that's just the way the markets work. But it's a different approach, and I think I think it's one that is really showing you the what happens behind the door, man. Like the back end of the algorithm, trying to crack that algo. Yeah, we'll see. We'll see what happens tomorrow, man. Tomorrow, a lot is gonna change on this. It's gonna change, man. Freaking crazy ass price action. Let's look at AMC plus APE, see what has changed. Huh. What the hell? Oh, is that what AMC plus APE looks like now? Is this AMC plus APE? Interesting. Wait, dude, are we getting a little sneak peek on what AMC plus APE is gonna look like? Because now, okay, look, guys, we made this indicator. It's called AMC plus APE a long time ago. Basically, what this bar does is you go back into the conversion, right, in 2022. Let's take away AMC for a sec, just AMC. And now the chart is, well, bring it back. It's the same here. But what this is supposed to do is ignore the previous values and just add the current value. So is AMC plus APE the same right now? Like this? Why? That's weird. Okay, well, so does that mean I don't need to shift it anymore? Is this the original value now? Bro. All right, well, let's see this real quick because I'm trying to see if this would make sense. I mean, dude, AMC plus APE. Hold up, dude. What the hell? I don't know if this would make sense. AMC plus APE's chart right now looks a lot better than just AMC's chart. It looks like it has more structure to it. Like it's following technicals better. I think that's always really been the case. AMC plus APE, at least. It's always been the case. But no, this one is definitely not. I don't think this is right because you see how different they look, dude? No, actually, I think it is right, dude. I don't think the low is this part here is correct because it's still taking the value of today, so it's still bringing it down. But I think that the rest of the chart is pretty accurate. The only thing though is I I'm not sure if the price is going to go up to hmm. Yep, you're right, man. You are spot on this. Yes, it is. That is exactly why. It's because one is converted and the other one is not. See, I'm just silly, man. I'm not even thinking about that. Yep, it's because this one has not converted yet. That is exactly why. Yep. Well, couldn't we do like a ape times 10 plus AMC? I'm pretty sure you can do equations here. Yeah, I think that's it. 96 to 26. The price was at 220 here. 220. So yeah, that wouldn't be wait. AMC 8 times 10 plus AMC. I'm trying to do the conversion, man. I'm trying to figure out where AMC is, what AMC will be trading at tomorrow. AMC, okay. I mean this looks to be pretty accurate if they're doing the math right here, the same events 8 times 10 plus AMC's current chart. I don't know why they did why they didn't just one day, man. Just all you had to do, you had one job, was merge ape, do the split. All right, that's all you had to do. But now we have two separate days of fuckery. Oh man. I'm gonna pull up the OCC thing here, but no, from my understanding is, there is a lot of just uh, there's a lack of transparency. I think with what how things are converted and how this all happens, the events at which in which they happen to, there is a lack of transparency. I think. And we it's just like you go back to the option chain thing. It's they I think they do this on purpose to really mess with like how what are we going to expect tomorrow, and then on top of that you see the price either dump or rally very quickly in the after hour session, so it's even harder to try and formulate and see where the price is actually going to go. I mean, just looking at AMC yesterday, we were trading technically at 28, almost $25, and then now it's almost half of that, So it's really just scammy, man. There's a scammy nature to it all, and how they're doing this. Uh, Man, can stair stepping down. What the hell? All right, let's look at some other things just to see what we can find here. Outline. Yeah, let's look at the. I'm gonna read the OCC thing that just came out here. So the adjusted AMC holdings, further adjustment, adjusted option symbol AMC1. So it talks about how AMC options were adjusted on the 21st here or 22nd of 2022, and will be further adjusted on August 23rd. So yesterday, like throughout the night, and then again on the 24th. So option symbol AMC1 remains AMC1. Talks about the dividends, delayed settlement. Okay. And then look, disclaimer, OCC accepts no responsibility for the accuracy or completeness of the summary, particularly for information which may be relevant to investment decisions. Which, yeah, you have to add that on the disclaimer, but doesn't that, like, this is what I'm talking about, man. The lack of transparency with this kind of stuff. With this kind of stuff, that is just, it's never clear. It's never like this is going to happen like this or whatever. It's always like when we got the adjustment of the chart on AMC, which to this day is different still on Thinkorswim, for example. Thinkorswim or Webull have a different chart than AMC. And yeah, these are the things, man. These are the things I'm talking about. The options, all it's saying, guys, and I, I'm very big on this. I've talked about it before. I made it very clear too before this even happened months ago that the option chain does shift and will be adjusted. It's about learning how what happens to the option chain and in the current contracts, how them being adjusted affects the value or the potential value of AMC. It's not saying that you won't be able to exercise or you won't be able to sell your contracts. All it's saying is, for example, if you go look at a stock that has very little volume and has an option chain, a lot of the times it will trade in increments of 5 cents. For some reason, some of them do have more volume and they trade in increments of a penny. That it's a matter of how much volume there is on the ask and the bid side. That's why with like lower float stocks, sometimes the bid and the ask there's such a difference between them. Like, give you an example, stock like DWAC, very large bid to ask, so the stock is able to rally up very quickly because there's such a big spread. The same thing happens with options, but options, they have an expiry date. That's the difference between just buying the stock. So in a way, a lower float is good for just buying the stock. But for options, it's terrible because if you have contracts, if you're currently holding contracts and you apply the same logic to it with a bid and the ask that is just so far from each other, you might have something that's outside of the money or even inside of the money trading at, somebody is bidding 5 cents, the price might be in the money, and then so somebody's bidding 5, and then the price or the actual price of the contract might be a lot higher. It might be like, I don't know. I mean, I'm making this stuff up. It's just hypothetical, but it might be $1. So if you have such a wide bid and ask, how are you going to get rid of this contract if nobody wants to buy it for $1? They want to buy it for 5 cents, which is $5. You know what I'm saying? Like, that is what I'm talking about. That the current contracts take a hit. That's what happened in August of 2022. The current contracts took a hit, and the new standard contracts that come back into play, which means that they are going to be adjusted based on the adjusted chart value now. So you're going to see contracts when APE comes back in. You're going to see contracts for $100. You're going to see contracts for $300. You're going to see contracts for $5, for $10 still. Okay? Like, they're going to probably add those at some point. They might not be available right away. But you're probably going to see contracts around that range for a little while. And those are going to be the new contracts that people prefer to buy because the chart, again, is adjusted. It's adjusted to what people don't want to convert and buy non-standard contracts when they could just buy contracts that are already adjusted for them. It's just that's what I'm saying, man. Uh, yeah, and basically, guys, what this does too, it's not over yet. Like, a couple of things do happen post this. So this right here, what it basically did was it screwed over a lot of shareholders because you're diluted here. This is like dilution for shareholders, but it's not. You're not diluting the stock. The stock is inverse diluted. Dilution. There's probably an antonym for dilution that I can't think about right now. But so the thing is, yeah, if we did an offering or something back in, you're adding more now to the float, which means now you're diluting the stock. So it's like further dilution at that point. It's like you're diluting shareholders, not the stock. And then once if there is an offering, because now they can do one when APE comes back in. If there is an offering, then they just add more shares to the stock, and then now the outstanding shares increase. They're higher. But I don't know why they would do that, considering they already did that with APE. Like they are basically debt free. So at that point, I don't know what the hell, what are you doing, bro? I'm just, that's just my opinion. Like, what else are you trying to do, man? Like, how much more money do you want? Some of it, yes, they are diluting that's a very small percentage. It doesn't equate to the same thing of 25 million. There is a small dilution taking place, but it on the big picture of things, that's very little. That's not a lot of shares. A lot of shares diluted would be over like anything that's over like 200 million or something. That would be a kind of a hit right there. But no, that's a slight dilution right there. That wouldn't really affect the float that much, in my opinion. But still, yeah, they are doing that. It is part of the terms. But I mean, at that point, like I don't want to hear any, like, from the administration part at least. I really don't want to hear anything about paying anything off right now, because APE was basically used for that reason. And APE was diluted multiple times, and now that it's coming back into AMC, it's like it basically did that to AMC, and then now the reverse split to kind of offset the effect in a way, but still, while it's still diluting current shareholders. So if you did another offering in the future, like apart from what just happened a year ago, it's just, I don't know why that would freaking happen. It just, from a fundamental perspective, that does not make sense to me. That makes no sense. No sense. But we'll see, man. We'll see what happens, because it's right now where we're currently heading. This is steep. This is hard. This is it's like, it's a pretty attractive price. I'm not gonna lie. I think a lot of people agree with me, is that this is a very attractive price on AMC. Looking at the technicals too, is like it clearly has fallen below a lot of levels. We have not seen this since 2020, 2021. So it is attractive, but guys, I'm gonna show you this one more time. I'm very both sides here. I'm clearly, rooting for the upside, but I'm not going to dismiss anything that is, because we've seen AMC do this, or no, not AMC. We've seen other stocks do this. Now, mind you, the fundamentals are completely different. So I'm not looking at that, but this is just a prime example of how something could turn into good and then just crap, right? So this is Bed Bath & Beyond, right? January 2023. It goes from $100, so it pumps from 26 to 100. This is post split. Or no, what am I talking about? They didn't even have a split. This thing just went from, no, what? Yeah, they did. Am I tripping, dude? Why is it not showing up? Or is it because it was like delisted or something? I don't know. That definitely has to do something with it though. But that one is showing something completely different. This thing goes, yeah. So this is the actual chart. I apologize. BBBYQ is the chart. But look, so this thing goes from $1 to basically 7, and then from 7 goes down to 6 cents. So like again, if you do the math reverse, look at that. These guys who shorted the stock from $7, that number right there, it's like if the stock went up that much to the downside. When people talk about like shorts and they're like, oh, you know, the stock can only go down 99%, like that's the max profit or whatever. No, it's not. Like they can, what if you shorted the stock up here to 6 cents? See? That right there is the true value of it being shorted from 30, but this is like, look at that. It'll only show 99% the downside, but the reality is it's not. They didn't 99% their money. They 211,000% their money if they were shorted up here. Crazy stuff, man, to just think about a little bit here. But AMC, not saying this is going to happen at all. I'm just saying it's very important, and I'll say this again. I've talked about the dollar range before. If AMC post-split, meaning that these guys were able to bring the price from $80 to $1, that is not good. That is just flat out not good. The reverse split is helping the price of AMC right now as far as looking at it from a psychological perspective. Like, you don't want to see the price go to $1, because if it goes to $1, it very likely will go lower than $1. And then at that point, it's just, you do have a Bed Bath & Beyond 2.0. So, you know, and I say this every single time. That is just how the market works. So that is the level that you don't want to see. Right now, a few things that are looking good is the indicators that we're tracking. The cycle is telling us that right now we're in the point of interest that has flipped. It's inverse. So the best thing to hope for right now, post-conversion 2, is bouncing on this range and seeing a healthy bounce on the way up. Because this doesn't mean it's over. I pulled up many other stocks already talking about this. And look at this. Being freaking Carvana right now. Carvana. $400 to what? To $4. Okay, that's doable. It did not go into the dollar range. $3. What does it do after $3? 1,500% from the beginning of the year. This stock right now is winning along with EVLO. I think EVLO is the other one that is extremely high right now. Okay, this one goes from 400. This one does go to $1, but to $1, it takes quite some time for that to fully happen. It takes like 4 months, so it doesn't do it as quick. And also, this does not have the same backing, very little volume compared to a stock like AMC. So you can't really look at it like that. I'm more than anything showing you guys the upside here from the lows that it's had. This one went from 50 cents to $13 in like 4 months. Also, I don't think I don't think does EVLO have an option chain? I don't even know if they have an option chain. So I don't know if this one would be a good comparison, but yeah, they don't have an option chain. Okay. Well, it doesn't really matter. This one, AI 185 10 doable, $10 all the way back to 50. $10, 400%. Upstart. $400. $10. What is that to the upside? 4,000%. And then from here, 700. And Roku. 488 to 40. 40 up about 150% right now. Okay? So now you look at AMC, and this is why we don't look at just Bed Bath & Beyond. We're looking at everything else. If those stocks already did that, and now post-split we have about $400 as the high, $400 as the high, coming down to about $10, which we're currently trading at. That kind of checks out. $10, which is a lot of what these other stocks have been doing. I would compare the fundamental value of AMC more to Upstart and Roku and Carvana than I would Bed Bath & Beyond, because Bed Bath & Beyond is bankrupt. AMC is not. So this is why I don't believe we're going to head there. We're going to go there. So those are the things you have to look at with that. After everything, those are the things we have to look at. Oh, man. Oh, man. Let's take a look at the market real quick. Market's coming down a little bit, slowly making its way back up. I think the markets, we're going to see highs. I don't know if we'll see them this year. We might. But I think this is a short-term breather, and I think the markets are getting ready to continue this pump. They're a little bit behind the blue chips, so NVIDIA, Apple, a little bit behind. I do think we're going to see that. And then from there, we might take a small correction. Yeah, a lot happening right now. A lot of fear-mongering happening, I think, in the social media space, man. And, I look at all that stuff and, like people are talking about the death of the dollar and all that crap. And I'm just like, no, dude, like, I don't think that's going to happen right now. I don't think right now that is where we're headed to. I think the markets are going to start pumping, and, and hopefully we get AMC and the memes coming back here. I talked about the correlation between the two. So I'm going to pull up changes here, set it back to my original value of 50, and then we will also bring back the ROC. Okay, so I can show you guys the difference between the two are slightly different. Okay, one measures the rate of change, and the other one measures the rate of change, but in terms of a smaller time window with also the percentage change. So they're a little bit different, but the thing I like about the ROC indicator down here is it told us where the market was going to come down without really having to do anything. Like we saw the market reach the previous high, which was 12 here, 12%. If you look at the chart, when was the last time the market did this? The market did this right here, December 2022, and on August 24, 2022. Okay, so around the same time that APE had done its thing. Right here, the markets are about a month behind, or a month forward. So right here, the market in July start dumping. And now we're coming down to this, the threshold, which is 0. So if the markets come down there, I think we're going to see some kind of reversal back up. This is amazing at respecting support and resistance levels. So this is why I love using this thing, is because it's really good at it. Clearly, every single time it has came down, it has respected the 12% range. Every time it hits it, it falls down, or at least it has inside the 2022 window right here. This entire cycle, it has respected the 12% level. So now that it's coming down, it's getting ready to bounce. Why I think we're going to bounce soon. Right around the threshold. Look at that. Look at how close we are to respecting this level right here, which is about 0. It'll come in very quickly and then probably start making its way back up again. Okay, so if we look at this and we look at everything else in the market, where we could potentially be, there is some correlation with November of 2020. That's what I talked about, that the markets are taking a small breather and they're getting ready. You can see right here similar levels to November of 2020, getting ready to come back up. We're seeing Moderna do this right now. We are seeing the crypto space do this. And we are also seeing the market do this. AMC. Rate of change on AMC. You can see it looks a little different too. 1, 2, 3. January 2022 and April of 2020. Going to be the ones that have the higher correlation here. NVIDIA. Yeah, NVIDIA, another one. Extremely over. And I have a lot of patterns I'm tracking, man, on NVIDIA. But I think NVIDIA is getting ready to, or close to coming down. I'll talk about some of the patterns I'm tracking right now that actually tracked inverse here. But this is a prime example of one. Clone this. Flip it. Okay. Here is the pattern. And right at this point here, it started to track inverse. You don't believe me? Here it is. Right there. Tracking completely inverse to the point. So it gives up on the 14th, and then it starts tracking the inverse version of that. The algorithm said, I'm flipping it. So we're right here right now. I think going into September 15th, because I'm expecting the markets to be bullish in September. I said August was going to be red. It is red. And September should be bullish for the entire market. So I would see literally the entire market. And then going into October, which I'm expecting the markets to come down, would make sense that AMC starts climbing back up, because AMC loves to dump when the markets are getting ready to dump. So maybe a breather stage in October, but we'll see when we get there. No, I still think that NVIDIA has a little bit more juice. I don't think it's done just yet. They're dragging this thing. They're dragging this thing for a little while. All right, guys. Well, that is going to be it for this video. I hope that it answered some questions and about the chart, AMC conversion, reverse split. I'm planning on going live again tomorrow, talk about the, see how AMC and APE look together, and we'll go from there and we'll see what happens. But Man, I think we're getting some clarity at least now. Now that the charts are coming back, sure, things are ugly right now, but we're getting some clarity, and that's important. So we'll see what happens. Make sure you guys subscribe and like, and I'll see you guys on the next stream. All right.